Thank you for joining us this Friday, the 4th of March. I'm Sofia Mavridis, a market analyst with Bell Direct. Well, the Russian invasion on Ukraine escalated this week. Countries around the world, as well as large companies, are attempting to disarm Russia and its economy. Now, this week, the US and the EU banned Russian banks from the global SWIFT payments system. This is the main global payments network which will block Russia's access to global financial markets. Now, this harms Russia's ability to operate globally, as it makes it hard for Russia to borrow or invest overseas, or to pay imports or get paid for exports. It's also disarming Russia's central bank from using its foreign currency reserves. Additionally, large companies have taken their own action, such as MasterCard and Visa, who have blocked financial institutions in Russia from using their payment networks. Now, trading on the Moscow Stock Exchange has been suspended since Monday. However, depository receipts of Russian companies have been trading. From its last close, the Dow Jones Russia GDR index has fallen 96% in the last 12 months. Additionally, there are currently discussions as to whether to remove Russian securities from major global indices. And the Federal Reserve Chairman Jerome Powell has said that a 50 basis point hike is off the table at the Fed's next meeting, scheduled for mid-March. The RBA has also held the rates on hold this week. Inflation, however, remains a global concern. CPI for the Eurozone was released this week at an all-time high of 5.8%. And commodities have soared higher this week as oil prices jumped over concerns of supply disruptions. Now, this week's news headlines on the Russia-Ukraine conflict have caused a choppy trading week. However, when considering the effects that geopolitical events have had on financial market performance over the past 60 years, we see that markets will often react negatively with the initial news. However, sell-offs are typically short-lived. The following 6 months to a year after historical conflicts that are shown on your screen now were in line with average long-term market returns. Now, taking a look at the local market, Monday to Thursday, the ASX 200 has gained 2.2%. Energy has soared 10% higher, and materials have also advanced. The energy markets are volatile, and oil has strengthened this week as Russia is the world's third largest oil producer and is the main supplier of natural gas into Europe. Now, on the ASX 200 leaderboard, energy producers and major mining stocks have made strong gains off the back of soaring commodities. Whitehaven Coal, WHC, advanced the most this week. Also making the top 10 were Lynas Rare Earths, Liontown Resources, Woodside, BHP, Paladin Energy, Beach Energy, and Rio. Separately, buy now pay later company Zip, Z1P, was the worst performer, falling over 15% since announcing its acquisition of fellow buy now pay later company Sezzle, that's SZL. Now, on the All Ords, Grand Resources GRR has jumped a massive 52% this week since reporting its full-year results after the market closed on Friday. It reported a $120 million profit jump. Now, mining companies Yancoal Australia YAL and AVZ Minerals AVZ also made strong gains this week. And the most traded stocks by Bell Direct clients were Fortescue Metals, FMG, Qantas QAN, Mount Gibson Iron, MGX, Champion Iron, CIA, the BetaShares Global Agriculture Companies ETF, that's food, Lake Resources, LKE, and the Auckland International Airport, AIA. Now, clients also bought into Core Lithium and ANZ, while took profits from BHP. Separately, reporting season also wrapped up this week. Now, of the stocks that reported, 43% beat expectations, while 36% were in line with expectations. And to end, economic data to look out for next week includes business confidence data for February out on Tuesday and consumer confidence data for March out on Wednesday. And that's all we have time for today. I'm Sofia Mavridis with Bell Direct. Have a great Friday and have a great weekend, and I'll see you on Monday morning.